Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your friends at Trade the Chain and Market Rebellion. My name is Nick Mancini, Senior Research Analyst at Trade the Chain, joined by Monty and CJ, both Senior Research Analysts at Market Rebellion. And we are here to break down everything going on in crypto, stocks, commodities, macro, any buzzword you could think of related to finance, we're going to cover in the next half hour to 60 minutes. So get ready. Hello, Bob. Appreciate you jumping in chat early. We always love to see that. Definitely a lot to break down today. The volatility on the crypto side of things has been frustrating or extremely, fun, depending on, what side you've been on. Equities are continuing to move higher. We got debt ceiling news coming to a head, it seems, or coming closer to a head. And we've got some interesting news coming out of Fed predictions with, the likelihood of an FOMC hike in June dropping from more than 70% down to, I believe, mid 20% at the time of this show. So a lot going on in the markets. We're going to go ahead and break it down for you. Let's go ahead and just start with the first kind of piece of news that I think is worthwhile. It's the debt ceiling, and the debt ceiling kind of seems to be the focal point of the macro conversation. Inflation, unemployment are certainly still there, but everybody seems to be sitting on the edge of their seats related to the debt ceiling news. So last night, Republicans and Democrats passed the deal in the House of Representatives. So, of course, if you know the American politics, it has to go to the Senate and pass there. And then once there, it'll go to the president's desk for signing. The X date is allegedly June 5th, so 4 days away. And that is the date in which allegedly the U.S. government will run out of money. So we are seemingly running out of time to get this passed in time to have a positive impact or just not a massive negative impact, I should say, on markets. So I'll stop there because we obviously had the news yesterday and we're kind of now waiting on what's going to happen in the Senate. But Monty, CJ, I want to bring you guys in here before we talk about the charts. Does this give you any confidence in potentially longs into June, or are you still kind of very much waiting for this news to pass before taking any large swings in a bullish or bearish direction? And then I guess the third option is, does this even matter to your guys' trades in the next week or so?
Nah, I mean, I'm not really looking at this. I mean, look, it could move the market in a day or two in a particular direction, but in terms of our system, or at least my system, and being long the S&P right here is just trend following and doing contrarian stuff. Like if you look at positioning within NASDAQ, you've seen a lot of large speculator shorts being forced to cover and actually start buying. And, NASDAQ has been kind of a leader as well as the Nikkei. So I kind of am expecting ES to follow until proven otherwise, because we still have like max positioning in terms of shorts within ES that I think still need to cover. If those shorts are forced to cover it, if the market continues to melt up, then we could go higher and do a nice stop run above one of the recent levels. I don't have the chart right in front of me, but yeah, I always look at like these events can be catalysts, but they're more about catalysts to the existing positioning. You know what I mean? Like it doesn't necessarily always matter if a company's earnings are bullish or bearish. It depends on who's going to take profit or who's going to buy. Like remember when Meta had horrible earnings and Jim Cramer started crying on TV? Like that was the bottom, right? That was the bottom. There's other companies that have had really great earnings and it's been the top. So
I'm sorry, but I forgot about that day, and damn it, if that wasn't like that was the bottom. That we should have all been looking at each other and go, Jim Cramer's crying on national TV. Why are we not all in right now?
Yeah, always obvious in hindsight. Go ahead, Monty.
No, I was just gonna toss a question to you, CJ. What do you think? Like, what if we start to see a flip in positioning? What if this news is a catalyst for people? Because right now it seems like sentiment still is overwhelmingly negative, despite the fact that the markets continue to grind higher. People are trying to short this market nonstop. It's just it seems to be the prevailing sentiment on Twitter and on CNBC. And on any financial show you watch, they're talking about bearish positioning. What do you think could happen, like, if this makes people more bullish than bearish, or at least capitulate on their bullish positions? Do you think that is a possible, catalyst?
Yeah, I also think one thing that we were talking about prior to the show that Nick had been mentioning was the possibility of another rate hike of 25 basis points, or not having that rate hike. And so those two things could be interesting bullish catalysts. But I think you kind of have to focus on price and ask yourself the question, okay, when are the bears truly going to be admitting defeat? They basically have been, a lot of them. But still, you're not going to hear rhetoric on like financial media of, oh, things are going better. We're going into a bull market. New all-time highs are imminent. The rhetoric is still recession is imminent within the next year. We're coming, down from an asset bubble, which I don't even disagree with, right? I just think people may be a little too bearish in the short term and not bearish enough in the long term. But in terms of what you said in like positioning, once people, I'd say the majority covers their shorts and is essentially forced to get long, that's when you're probably going to see the real decline that everybody's been waiting for. But I don't know, maybe 2 months, 3 months, 10 months. It's hard to say when these positions are going to be kind of resolved and covered, or if they will be at all.
Yeah.
So to wrap up the kind of debt ceiling conversation, it sounds like, if no deal is reached or it extends past the X date, then it could potentially be calamitous for markets. But if it goes as, business as usual past before the X date, then no real large impact. It's just, the government did what the government should have done, and therefore we wake up tomorrow, with a new day, and life, returns to some semblance of normal. Am I kind of understanding that gist correctly?
Yeah, as long as the sky is not falling on June 6th, I think markets could keep doing their thing. Still all about positioning, all about who's long, who's short, and the government will do their job and get this done by the X date. I'm pretty confident in that. But
I hate predicting these things, but this one I actually think is pretty, like, very, very low chance, like anything defaults or like Monty said, government will do its job.
Don't put it on a Barron's headline. Don't take CJ's words and put it on a headline.
Is that where we're going now with the conversation? Monty wanted me to bring something up earlier.
No, I have it ready to go, actually.
All right, good.
So before we dig into the charts, because definitely want to cover the Qs, definitely want to cover SPY, probably talk about a few maybe AI stocks, and of course go over crypto, but just kind of set the table for what may impact us going into the weekend, at least on a short-term basis, is we have the unemployment rate tomorrow that will also come with hourly wages, which has kind of been a very sneaky metric that I think a lot of people should pay attention to, that isn't really talked about at the forefront of the inflation conversation. So employment rate is expected to tick up. The job openings were obviously more than expected. Jobless claims a little bit smaller than expected, but on a month over month, we are seeing more jobless claims and less people, getting jobs. So certainly in the direction of where the Fed wants things to go. So I think, if this is ticking up tomorrow, markets may, like that type of reaction. And of course, if hourly wages are ticking lower, markets should like that as well, because we want wage inflation to be decreasing, actually, really more so than the inflation metric. So keep a lookout for those tomorrow. Those could definitely breed some volatility into the morning and lead into some very interesting price action into the weekend. So I'll pause it there because I know CJ has a bunch of stuff pulled up, as well as Monty. So we'll kick it off with CJ. And let him kind of go over what he's looking at on the traditional side. And then we'll move into, obviously, crypto. And then, of course, as we always do, if you are listening, you have any tickers, whether it's stocks or crypto, please feel free to throw it out. We'd be happy to discuss it towards the tail end of the show, go over some TA fundamentals, whatever we have. So feel free to throw that out there. But CJ, what are you looking at with Tesla? I was actually just looking at this with the TTC community and some friends this morning. Definitely looks like it's, maybe breaking out, could soon. Are calls, something you're looking for? Or what kind of trade are you looking at on Tesla?
So this is one that I made this morning. because last night I was watching a rerun of Fast Money. Also could call it Fade Money. That's a good, should change the name of the title of that show. Anyways, there's this one individual on there who's shorting Tesla, and the stock keeps going against them. And they're just so emotional and adamant that a reversal has to occur. And it's not just Tesla, but this was one of the ones that was very specifically mentioned, and people were very emotional about it. There was very similar rhetoric around NVIDIA saying things like, it's all speculative, this isn't fundamentally justifiable. Either way, the markets and prices are going up. So it doesn't matter if it's justifiable or not. In terms of Tesla, I wouldn't short a triple top or a double top here. Like if you look at anything like AMD or Netflix that's come close to a double top recently, it's just blown through it. The way that I played this trade personally is I didn't really know if it was going to break out or go up per se, but I just wanted to take the opposite trade of that particular person. So I just sold a put spread, and you see that red line on my chart. As long as price doesn't go below there, by time, the black line hits, what is that? June 15th, June 16th, something around that. Of course, you can close the position prior to then, but ultimately that's where my break even is going to be on the put spread that I sold. So we'll see.
CJ, what's the significance of the red line? Is that like a previous daily high?
So when you sell a put spread, you collect premium up front. Let's just say, for sake of simplicity, you sell premium and you get to collect $1,000. If price does not close below the red line by time it reaches June 15th or whatever that black line is, then you will get that $1,000 and you will collect all of the premium. However, if it doesn't, you have to buy back the options for a little bit more than what you sold them for. I mean, it's just like shorting, but you're covering yourself. But that's ultimately the significance. That's kind of where I got in the position when I first sold the spread. And as long as price doesn't go below there in the next week or two, theoretically, you collect that full $1,000 of premium.
Okay, so it sounds like you're definitely bullish on Tesla, at least in the near term, heading into June. Just to ask the question, is there any catalyst around that? Does Tesla have any potential, news updates or any whispers that may, be a boost or detriment to price action within that time?
Before the show, you said it's good in markets to keep things at the 70 left end of the bell curve. And I think that is applicable to this particular trade as well, because it's just like looking at inverse contrarian trading. I think if you take the basis and assumption that the vast majority of these people aren't professional traders, they're not making their money from trading, they're media personalities who are selling a product, and 95% of them are going to be unprofitable and lose money trading over time. If I can manage risk and not lose too much on this Tesla trade, like I'll be able to survive and just fade the next one, because the majority is often wrong. And I'm just doing the pure opposite of this particular trade. Not to mention the technicals look really good and there's a lot of momentum building. It kind of reminds me about, Nick, do you remember the sentiment that people had when Bitcoin first went off 16,000 and went to 20,000? Everybody was like, the Binance cartel is pumping us, right? It's an artificial pump. It's like, all right, well, the profits in these people's accounts aren't artificial. They're quite real. So when you have sentiment that I think is so in contradiction of what's actually happening in reality, that's the thing to pay attention to. Because with Bitcoin, I mean, we went much higher after that initial hesitance or fear, I guess you'd say.
Certainly. And wasn't trying to take away anything from the trade. Was just trying to, make sure that the audience knew.
You were asking smart questions.
Well,
should be done.
And for the audience, what CJ is mentioning is sometimes, in markets, left side of the bell curve in terms of the IQ level is occasionally the best way to play it. Especially when things, and I won't suggest this for every type of trade, but there is a saying that, if price is pumping, Sometimes you market buy, you clench your cheeks, and you hope that price doesn't go back down. And certainly, that is occasionally, a very profitable trade. And that's also why CJ is calling out stops where you would cut the trade and the type of trade that he's looking for. So it's not just a blind entry. There is some method to the madness. So before we move over to Monty, CJ, just because we're on the equity side of things, and I think there's a lot more action there than crypto in terms of, talking about that profit side of things. Do we want to quickly go over maybe the Qs before we ship it over to Monty to talk about his crypto and kind of equities correlation?
Yeah, I'll start sharing once more. Give me one sec.
I love CJ's philosophy. If 95% of people don't make money, then all you need to do is identify one of those people. It's not that hard to find the 95%, and they're not making money, and just do what they don't do.
That's a good point, Monty. There are certainly a lot of people who are making money who call their trades, but sometimes it's even just as profitable to find someone who's not making any money calling trades and take the inverse of their position. Because hey, that's alpha. Accuracy can work both ways. So
I spent my first 5 years in markets trying to identify the smartest people and try and copy them. And in the last year or so, I've realized that you can do much better just doing the opposite. Finding bad people and doing the opposite of what they do. Anyways, what I want to talk about in terms of S&P and just give a quick overview. What we were referring to earlier when we were talking about positioning was looking at NASDAQ or QQQ, either one. We are somewhat back to neutral and almost at like a short level for positioning. The only difference right here is that retail is still short. I would like to see retail get long the NASDAQ before trying to go short any of these tech names. And also reason why I think these tech names could potentially go a little bit higher because we still have, some retail shorts that could potentially get squeezed out. Also, when you look at ES, and the reason why I remain long ES, one is because speculators still are not completely giving up on their shorts. Large speculators are getting even more short from last week. And this book, I don't know about you guys, but this doesn't look that bearish of a chart.
No, I agree with you. That's one thing that I've been trying to comprehend.
I was about to put a 12-8 EMA crossover just to show that we've been trending bullish for quite a while. But this is a nice trend following chart. If you see the 100 level on the COT oscillator, that's just a reflection that we're still at max long levels in terms of commercials. And, 95% of retail is still trying to short here. And I don't know, it looks like a strong breakout level to me in which we could run. I think a lot of people would put their stop levels here. I wouldn't be surprised to see price run those stop levels, very similar to how the NASDAQ did. I think the NASDAQ and the Nikkei have really been leading. So those are very important to pay attention to. But look, everybody wants to short the Qs. I literally saw another YouTube. I like watching a lot of YouTube. I find it to be very, very helpful. But everybody, the trend lines that were getting drawn today were pretty interesting. Like this one, people would be like,
so one thing I wanted to ask in relation to this, and I think, it kind of, the conversation I think started to crop up around AI earnings yesterday. AI was certainly a boon for, both the Qs and SPY. And I think that there was a metric that I saw yesterday that, without AI related stocks, then they would actually be down on the year, the Qs and SPY. And of course that's, if water wasn't wet, then we wouldn't drink it, whatever. But, it does beg the question, is this kind of AI focused rally, at least maybe this is rally number one, if that is over, or, we've already seen all of the, the buying from the AI, the first AI frenzy, if you want to call it that, does that potentially negatively impact your outlook on at least near term, price action for crypto or for stock indices? Because, if everybody's selling a positive AI earnings, then, and everybody's selling, everything else earnings, how do we make sense of that? Because I agree with you. Things do look bullish right now, but taking a step back in the context, it's been this kind of narrative craze. So if this narrative craze starts to, trickle out a little bit, how will that impact broader price action?
I mean, conceptually, if you just think about it, like, is there really a difference between AI stocks and the way that they're pumping now? Is it any different than SHIB or Dogecoin and how they pumped earlier? Obviously, AI is actually utilitarian, so it's probably a better example is like the two boom and bust cycles of the turn of the century around oil. The first boom and bust cycle was crazy. It's kind of like what we're experiencing now, but then it took like years after the fact to discover new uses, similar to like what we'll see in AI likely. So I think there will be another boom cycle in AI maybe, throughout this decade. But right now it seems very highly speculative. It seems like what you see towards the end of a bull cycle where you have meme coins and high beta assets rallying the hardest. So I definitely think that like it is somewhat cautionary, and it's a good indication that we're, in the latter half of the echo bubble, but tech is still going up because people don't really think it is going to go up and don't want it. Monty, you've been talking a lot about AI. We had a lot of questions around AI in our webinar yesterday, so I'd love to hear your thoughts on some of this too.
Yeah, no, and one thing that you shared that I thought was a pretty poignant chart was the adoption of the radio and the radio stock chart.
All right, I'll bring it back.
Yeah, if you want to.
This is a scary chart.
I mean, it's not the same. I think AI has certainly played a role, but I still think it's all about positioning, right? AI has shaken out a lot of these short traders that have been bearish and trying to short these tech stocks, back down to their lows. So many people have remained bearish throughout this rally, throughout this quote unquote echo bubble, that it's mostly about positioning. And then a positive catalyst comes along like AI that really kind of shakes the market up and gets people excited. It forces those puts to cover and drives price up even higher. But now what I wonder is if price is up so much, we have stocks up so significantly, are retail traders going to come in and try and short them? Because what people love to do is, fade narratives. It works a lot of the time in crypto, but, I'd be very cautious fading some of these big tech names. I think they still have a lot of room to the upside. Nick, if you could just quickly throw up my screen.
Yeah.
One example is Meta. And, CJ, you talked about the Binance cartel and how they were buying back their token.
This is real. This is like actually verifiable.
Well, Meta also just announced their Oculus 3, I think. They just announced.
Yeah, so there's a ton of news around Meta today. They laid off an additional 1,100 employees, which you would think is bearish news, but really it's not, because they were a bit bloated and inefficient. And like during times like this, when you see companies cutting costs, it's not necessarily a bad thing. But this is what's, I think, most important is the stock buybacks. And this is something that John has been talking a lot about, but I think a lot of people overlook. If you're trying to short Meta right now, you're essentially trying to swim against the tide because they are buying back their own stock. They plan to buy back $60 billion worth. They've bought back $9.3 billion already. But think about how much is left to buy back. And you don't want to be going against that. So regardless of like the technicals, regardless of the fundamentals, I think that this thing keeps going because one, people will keep trying to short it and they'll be like, oh, look at this gap right here. This gap's going to fill, it's got to fill eventually. Right. But if you zoom out, we got this big gap up here all the way up to like
another gap. Yeah.
Yeah. And, plausibly, I don't think it's out of the realm of possibility that we see Meta continue to run as long as they continue to buy back their stock and people try and short it. So that leads me to believe that the rest of the Qs can run as well because they've been, pumping on a similar narrative. Now, things like NVIDIA, when I take a look at this, obviously massively benefited from the AI narrative, is still doing so today. showing signs of positive price action. Is it sustainable? That's tough to say for sure. I think Nvidia will, eventually cool down a little bit, and we'll see stocks like Amazon really catch up. It's doing that today, or not catching up, but it's showing some nice price action today. And I think Apple as well. All of these, like this is like, look at this kind of where we're at right now with Apple. Like this is plausibly a breakout level. And if people try and short this with vigor, which is what we've often seen when we approach a local high, I think that, we just keep squeezing higher in the Qs, and the Qs could plausibly grind up to 400. I don't think that's out of the realm of possibility. That's a high target, but that's the power of positioning. And if people underestimate, or if people rush to short this AI narrative, then they're going to get punished, and that punishment will look like the Qs pumping. And I don't think people are ready to give up on their bearish sentiment yet, because they're still conflating the economy and the stock market, and they're not the same thing. The economy is garbage right now. That's a fact. But the stock market, look at the Qs, man. There's a lot of opportunity here to make money, and I don't think that's changing anytime soon, despite the fact that this AI narrative has been a large part of this positive price action.
And I think Apple and Amazon are two kind of sneaky AI plays for the future,
100%.
because just think about it. So Apple is coming out with their own headset to compete with Meta. So on a metaverse level, Amazon and Apple, you can pretty much trade the same in terms of future outlook there. And then Amazon pretty much runs the distributed operating systems for most future state, edge tech, Web3 types of companies. So if you think more AI companies are going to sprout up and use, very intensive, computer usage, GPU, CPU usage, then you would definitely want to buy Oracle or Amazon or Google, which are all cloud focused companies. Right. And so, talking also, I had to laugh at the NVIDIA 420 price cap, which is just, the state of this market is hilarious. But I do think that it's now time. If you miss the NVIDIA, if you miss the AI, even Apple is obviously maybe a little bit overextended for an entry immediately, but there are definitely companies that I think will get downstream plays from this AI narrative that are really not at the forefront right now, and that includes Apple and Amazon and Google, Oracle, etc.
I could not agree with you more, Nick. That's something I've been preaching to our members over at Market Rebellion. Is like, NVIDIA is now a $1 trillion company, which is insane, because that puts them in the category of the companies that you mentioned, like Apple, Amazon, Microsoft. These are companies that conglomerate data, that have mass amounts of our information, right? And they're able to turn that into ad revenue, and they're able to, that's what the future of AI is going to be. It's not going to be strictly processing power. There needs to be tons and tons of information. And where's that information stored? In Amazon's distributed servers. So, that's going to be, I think, definitely a downstream effect that still hasn't plausibly kicked in, So I completely agree with you there. Amazon, if there is an AI revolution, Amazon will have to play a large role in it. Not just
they'll
because
play the biggest role, I think, because what if Monty, hey, let's start an AI company. Okay, well, we're going to need, all this GPU usage. We're going to need all this storage. We're going to need all these neural networks. Where do we go? Well, AWS is the best option. So we might as well go there. And it's pretty much the same price comparatively to Oracle or Microsoft or Google. So that's the thought process here. So if you think if you think me and Monty times, 1 million is going to happen, Amazon is what you want to hold.
Yeah. And I do think that there will be people continuing to work in the AI space for the next 20 years, like as they realize the potential. We're still a long way off from like a generalized AI, the sort of things that you see in the movies. But that doesn't mean that these stocks in the meantime can't benefit tremendously from the innovation that occurs in that space. And I think that, still, while we have it's a mix of both of those things, right? We have this overwhelming negative sentiment, people trying to short the market, yet, there's all this innovation happening, all this excitement happening. I think companies like Amazon, Apple, Microsoft, Meta, Google are all going to catch up to NVIDIA because they will play just as important a role in the AI, in the next wave of AI as NVIDIA, if not more. Like NVIDIA sells a physical product, whereas Amazon, stores data and also conglomerates data. Like they know stuff about us, right? And that's what it would take to make a truly generalized AI that thinks. That's what rather than a specialized AI like ChatGPT that can write you a paper. A generalized AI would be something that can think like a human being, and you could have a conversation with it and it would pass a Turing test, meaning that you wouldn't even know that you're having a conversation with an AI. And we're still a long way off from that, but the companies that are best suited to do that are the ones that have the most information, right? Amazon's got a ton of information. I don't know about you, but if you go on Amazon.com, they recommend items to me that I didn't even know I wanted, and I end up buying them. And same thing with Instagram and Meta. Their ads are so targeted; it is unbelievable how niche they get it. And I buy so many things through Instagram, and I'm certain that other people of my age demographic are doing the same exact thing. So it's not just about, the physical GPU. That's what everyone looked at first. But think about everything else besides that, the information required. I feel like companies like Apple, Microsoft, Meta, Google, they're the ones that are most well positioned to take advantage of that, speculation. So those are the ones I would be betting on, for some downstream positive price action. Obviously, NVIDIA, cracked the top 10, became $1 trillion company, unbelievable price action. I think some of that gets given back to those big names that we mentioned, like Amazon, Apple, Microsoft, Google, Meta, etc. So that's kind of how I see the AI wave playing out here over the next couple of months.
100% agreed. I think, it's now time, if you do believe that AI is the next narrative, and will be, the best narrative, when QE starts or when markets are really kind of back in swing, then, obviously look out for those names that Monty named. But also, we'll probably be talking a lot about those IPOs as well. Because remember, 2020, 2021 IPOs were hot. None of them were even in, or not none of them, but most of them were not even in the narrative category, at that time. So imagine IPOs plus narrative could be pretty lucrative. So moving forward, Monty, kind of wanted to pull some of your charts back up, maybe switch over to the crypto side of things. I know, a lot to talk about on the Bitcoin and Bitcoin and Ethereum charts. Couldn't get that out of my mouth. But also saw that Bob had mentioned, our favorite long crypto equities and short crypto equities. So I think that may be a good way to kind of wrap up the show. So let's go ahead and dig into what we're seeing on Bitcoin and Ethereum, and see what's cracking on those charts. And then we'll dig into some of the more fun fringe stuff later. But I do have a few in mind for you, Bob, as I'm sure CJ and Monty do as well. So let's pull that chart up. I think Monty kind of stealing CJ's thunder here a little bit. But,
yeah. I was going to give him credit. Don't worry. I was going to say credit to CJ on this one. But, one thing that we've been talking about a lot, even in this episode alone, is, taking a contrarian perspective, right? And this article was published on January 30th. This is the most perfect Barron's article. Fade. China's comeback is getting started. How to play it. This is the Hang Seng Index. That was the local top. And since this thing has been kind of falling very, very hard. And that obviously has significant implications for Bitcoin. We're still seeing positive price action out of the Nikkei. But when we talk about one thing that we talk a lot about on this show, is the Kospi as well. And that has been getting rejected from this level again at 2580, not showing the best signs of positive price action. But I really think the Hang Seng and Bitcoin are starting to show some very similar signs of price action. And I don't think until we get, both the Eastern and Western indices moving in the same direction, will we get any sort of like vigorous Bitcoin price action. So right now, I still hold Bitcoin long. I am short BITO, just as a sort of hedge. Um, so I mean, this is a steep target of $12, but we're getting that rolling over of the moving average that I was looking for here. Not quite as steep because we did get that little pop over the weekend, but still, this thing's moving down at a breakdown level here. I think if you plausibly wanted to play Bitcoin, like Bitcoin short, I think the best way to do it would probably be, either selling some calls into this, because it has been a little bit choppy, and this isn't necessarily the steepest trend line, so you might suffer from a little bit of time decay. So sell some calls rather than just buying naked puts. That way you don't have to worry about that as much. And I think this one does eventually head back down, retest the $14 level. That's where I'd consider exiting. I know, Bob, that's a scary thought, but that's what we're dealing with here. And even though, like right now, why would you think about this? Like if you're if you're me, or if you're CJ, if you're Nick, like why would we be buying Bitcoin right now when the Qs are absolutely pumping? There's no reason why I'd be speculating into Bitcoin right now, or putting allocating any of my capital towards this right now. I'm not trying to play the role of hero and save Bitcoin and prop it up. Like that's not what I'm trying to do. I'm trying to make money, and to
Monty,
do that,
we need your God candle. We need it.
No, it's not time for that yet. That day will come, but not not now. I think this market, continues to see some negative price action because of what we're seeing from the Hang Seng. What we're continuing to see, also weakness from the Kospi as well, like I mentioned, and in general, just a lack of enthusiasm around Bitcoin. And this space has taken a beating in the last 8 months. There's no doubt about it. That's going to take a while to recover from. You're going to have to be patient. And that's why I did take on that BITO short, because I still hold Bitcoin. I recently moved it from my ledger to the Bitcoin Core wallet, but like I'm still holding it. I don't care if it goes down to 20K. I don't care if it goes down to 14K or even 12K. It doesn't matter to me. Like, because then I'll be still making money on those BITO calls. So I'm not delta neutral by any means. I said that this morning, but it's just a good hedge to have on, I think, is looking at BITO, considering playing that to the downside, perhaps selling some calls or selling a call spread in order to capitalize on some of that downside price action that we're seeing here in Bitcoin. So that is what I'm seeing.
What was the ETF that you had up before? Was it BTI?
BITO
or
BITO?
BITO?
Yeah, it's the ProShares Bitcoin strategy.
Yeah, there's been a bit of a discount on that. Recently, I actually came up in discussions with a friend yesterday, and we kind of were talking about the Grayscale Bitcoin Trust, and of course there's a good reason why there was such a steep discount on that, related to only the ability to sell. But when we're talking about this discount, my personal explanation, I'd love to kind of hear from Monty and CJ if you guys have any insights. But although it's much more liquid and you can of course buy and sell, it's not Bitcoin. It's basically a Bitcoin index. So if there are more sells than buys over time, it will likely create a discount to the normal asset because it's not the actual asset. And although it's not, the trust in terms of you can only sell, you can obviously, it's quite a liquid asset. It does kind of show the traditional interest into Bitcoin that it's been quite bearish recently. So figured that was just something to point out in relation to kind of your outlook in terms of trading it, because it obviously has been beaten down a little bit more than Bitcoin, but could also be, factored as a potential signal for short-term price action in terms of how will the discount close? Will the discount widen? Right. What I'm looking at right now, it tells me the discount will likely widen. Of course, it's just a hunch based on what we're seeing, but these are kind of things you look for when you're like, oh, well, are funds or big money or high net worth individuals, are they interested in these assets? And if not, why? So I think that's just a good kind of pulse check, if you will, if you are, extremely long or extremely short Bitcoin.
Yeah, you're absolutely right. I mean, right now it's about a 6% discount, but I think that, we could see, this gap continue to widen, Bitcoin showing less volatility than BITO. That would not surprise me whatsoever. Bitcoin's relatively stable despite the fact that, we're kind of trending down. I mean, 26K, 27K, we likely won't break directly through the subsequent 25K, 25.7. We got some critical levels below us where I expect some bidding to occur. But with BITO, you're right, it's all about positioning. So it's like when I take a look at this chart, we're at a breakdown level. Bitcoin is still above it, trading at a premium. And I think we see Bitcoin fall below this moving average. And as a result, bring BITO down, and we see, subsequently BITO come back and test into what level was that I mentioned? Like around the $14 levels where I'd be looking to take some profit on that. And I think we could see that as soon as, the end of next week, based on what I'm seeing from Bitcoin, the Hang Seng, and the fact that the queues keep going up. Like, who's going to buy Bitcoin? That's my biggest question. Who's going to buy it when you have, tech names popping and this AI narrative, really driving the market right now? I think that's what everyone's looking at, is kind of AI, and Bitcoin's kind of been cast aside for the time being. It'll have its time in the sun again, but for the time being, I'm putting my capital elsewhere, into assets that are actually moving, so I can, generate some revenue.
Yeah. And I'll go ahead, CJ.
Lost my train of thought. I was just going to say I had an article cover to share as well after Monty was sharing the one regarding China. If you want to just flash that one from a few days back.
Oh no.
So
bad timing.
It's a bad omen.
Depending on what trade you're in.
Yeah, right.
But
so, yeah, that's all I wanted to. That's all I wanted to share.
CJ is very adamant about his headlines and price correlation. So I think I'm definitely.
Dude, do you want me to go through them? Like, there's one from January 9th saying tax bill is due, and that tech stocks are going to have to pay a lot more. Literally the exact bottom. The death of crypto was published at $16,500. It's uncanny how this stuff works, because if you think about
the article in 2018 was like that was the lower high of the 2017 pump.
Oh right, yeah, the Forbes CZ one we were talking about. It's because if you think about it, like, it's not because the writer is dumb. It's because there's an interesting trend happening. It captures a lot of attention. The media's job is to capitalize on attention and things that interest people. But by time that they get it written through an editor and actually into publication, the trend has probably gone on for a while, and it's probably near its end, right? If everybody wants to focus on it to the point where it draws a magazine cover's attention. And of course you have Amazon.bomb back in before it went up astronomically. Anyways, I always find these fascinating and worth sharing, I think. And then the last thing before we switch it up was just this chart of because we were talking about, what were we talking about, Monty? Like something about when you were mentioning the 1920s, or
yeah, it's just I think we were talking about how, the initial wave of AI is like purely speculative. It wasn't until much later where people realized like a true use case. As you can see from that chart, the Radio Corporation of America pumped hard, then fell during the Great Depression, had an echo bubble where people are like, this is still exciting technology, but then it subsequently went down even further, and up there it says 9,400. I don't think Bitcoin goes anywhere near 9,400. I'd be providing the God candle before that, Nick. But
I'm just I'm just reminiscing on what it would be like to just live in the roaring 20s and be all in on Radio Corporation of America. That 1927 to 1929, just rolling it into Model Ts and Titanic rides.
And
There's so much to do.
that's
The
the thing is like
1907 cotton bull market. Could you imagine riding that? Ooh, man.
that chart is it reminds me so much of AI because initially like we saw that massive wave of speculation, and people are like, wow, this is exciting technology, I can send my voice through the air. But then they're like, okay, but what the hell do we do with it? Like what good is this? And then you realize all the commercial applications, and you start getting or radio shows that are generating millions of listeners, and obviously military applications of radio were hugely important to the adoption of radio. And then, like you said, Nick, like every car started having a radio in it. So I feel like we're in a similar place with AI, where it's like everyone's all excited about it and buzzing about it and recognizing the future potential. However, the applications currently aren't here quite yet.
It's definitely a good way to look at it, and always important to both, be able to look into the future in terms of where trends may lie, but also being conservative and not overextending yourself in terms of making bets on those types of things. So very good point there, Monty. One thing I wanted to bring up, and oops, got rid of everybody's face, but something I'm looking at from just the Ethereum and Bitcoin perspective. And if you know me, I'm very much a level to level trader. I always have a lot of white lines on my chart. And what I'm looking at right now, specifically for ETH, is obviously, this would seem like a bit of an anomaly yesterday, clear deviation with multiple wicks above the resistance level of 1875, and obviously steep drop down. But we pretty much closed the entire range, within a couple of hours last night, and led to, zooming back to resistance at 1875. So what I'm looking for here is potentially similar price action. We've got multiple wicks potentially closing back into the range. And if that is the case, then I would probably expect a first target to be down here at about 1860, with a second target to be, right around these equal lows of 1840, but potentially down to these lows right here around 1836. And what I would be looking for longs is a full reclaim of the 1875 level. So closing back above, no ugly wicks like this. And then, a reclaim of the weekly VWAP would make me very bullish back up to the range high. But if this does complete and we end up making it back down to this range low, what I would be looking for is a classic deviation of this large range. I would be looking for price to probably dip down here to maybe 1820. Grab this liquidity here. Also, the previous week's VWAP, which is pretty important for range trading on relatively tight ranges. So if we get a deviation down here, grab 1820, close back above 1836, then I'd be looking to trade up to 1875 and potentially trade back up to the range high. So that's what I'm looking at on Ethereum, at least for short term, heading into the weekend. And of course, remember, we have the unemployment report tomorrow, as well as hourly wages, both very early in the morning, 8:30 a.m. ET. So if those, if unemployment rate is higher, hourly wages are lower, I would expect definitely equities to have a really good day, but that could be a nice catalyst for ETH, heading into the weekend if we don't get too much bearish price action in between. And then for Bitcoin, not as simple in my opinion, but top of your range is basically right here. Bottom of your range is basically right here. What I would be looking for longs is a reclaim of the 1 hour estimated 200 moving average, which also coincides with the previous daily close. Get above that, then we can start talking about, grabbing liquidity up in the 27.6, 27.8 area. And then, of course, very similar to ETH, getting rejected at this level yet again, similar to last night. You would typically expect that to lead you back down to the low end of the range. So looking at 26.5 again, been a very critical level, as you can see here, deviation. So what I'd be looking for longs, if we get back under that level, is grabbing liquidity potentially as low as 26K, but would start to probably look at liquidity down here around 26.3, 26.4. That would be, potential deviation, long the reclaim, trade it up to this level, and then trade it up to potentially all the way up here. So that is what I'll be looking for as we head into the weekend for Bitcoin and Ethereum. And, system is basically, rejected off the highs, short to the lows. If it deviates beneath the lows and back into the range, usually a pretty good long opportunity. So that's, I think, just a really simplistic way to play this gross price action. But my one recommendation, I'm sure CJ and Monty would agree with me, close your freaking trades as soon as they hit whatever levels that you decided was a good exit or or end of that exact trade. I see a lot of people, and we've talked about this before, see a lot of people trying to trade for breakouts, and Apple's going to break out, Bitcoin's going to break out, Ethereum's going to break out. Haven't had too much of that going on. It's been few and far between. So my recommendation is to treat your swings kind of like scalps and close early, because especially on this Bitcoin chart, if you were longing, for this reclaim, you got screwed pretty quickly. Again, if you were longing for this reclaim, you got screwed pretty quickly. So, just make sure that you're managing that and you're not overextending yourself, because I would much rather compound a 1% trade every day than see a 10% trade get washed away every couple of days, so that would definitely be more preferable in my opinion. So, I'll pause it right there. Unless, I get Monty, CJ, anything related to Bitcoin or Ethereum that I mentioned that stands out or that you potentially disagree with?
No, I'm just wondering, what are your thoughts on, any reason why it's like showing, a little bit more resilience than Bitcoin over the last couple of days? Any?
Yeah, can we look at the ETH BTC chart?
Yeah, I don't know. And please DM me later. For some reason, I have multiple windows of TradingView charts. So for sometimes like the historical little drawings get like.
Hey, one of those was spot on.
He won, right? But I mean, we've been talking about this for a while. I mean, Monty and I were, screaming at the high heavens during this deviation. And I think even down here, we were waiting. But, this trend right now, ascending triangle played perfectly, not as perfectly as I think probably everyone would have wanted, but deviated back under. We're still riding this. Typically what you'd expect is at least grabbing the liquidity up here. So your target, if you are long, I would say you should be long from like the 69-cent level or high 68-cent level. But what you'd expect is definitely, rising above this liquidity right down here. So if you can get above this level right here, which is clearly where the stall has been, then you pretty much got a lot of room to roam here, because there's not too much range activity. So I definitely think if you can get above, 695, then you can probably, I think make a bet up to 7 cents flat or just higher than that. But if you are an Ethereum bull, then this is, the best chart you've seen in quite some time. But I will say, every single time the narrative on Twitter starts that Ethereum is overtaking Bitcoin. And I'm sorry if I can see myself a little choppy right here, so apologies about that. But every single time you see on Twitter, 10 tweets in a row, Ethereum's overtaking Bitcoin, ETH BTC's outperforming, all in ETH. That's typically when the ride ends. So that's just one thing I'll mention. That's kind of, related to CJ's Barron's headlines. If you see every CT Twitter influencer talking about ETH being better than Bitcoin, historically a very good short. So that's what I'm looking at right now. Of course, if we get above 7 cents, then we can start talking about this liquidity all the way up here. But I don't want to get too ahead of myself. So, Monty, I know you pay very close attention to the ETH BTC chart. So, do you have a chart that you want me to pull up, or do you want to opine on
this
what
chart's
we're looking at here?
This chart's fine, and yeah, you basically read my mind in terms of like what I was going to talk about next. And I was going to pull up this chart. And just mention that, it does look like we have here. I'll go ahead and pull that up. One thing that's going to be interesting is what happens when we hit those levels. What do we start to see happen in the market once we hit this first level here of about 7 cents, and this next level here we saw this big liquidity grab? I think we break past this level. One thing that's worth noting, though, is kind of the declining bullish volume that we've seen over the last few days and weeks. That kind of tells me that we could see a plausible pullback. but you can't really look at this pair. You can't really like analyze the volume in the same way you would another or just a straight up like USD pair assets. So don't give that too much credence. That being said, like when you look at ETH outperforming Bitcoin, I do find it a bit atypical in the sense that, like, you know, when we talk about flow of capital, we talk about, you know, Bitcoin being the most stable, followed by ETH, followed by the most volatile being the altcoins. But ETH is showing incredible stability, and I think that's really just the result of the merge and the amount of people and the amount of capital that's staked on ETH. Like, I don't know if anyone's actually figured this out exactly, but you know, how low could ETH go, like with all like if we just saw all the ETH that is not currently staked sold, what would that put price at? I would guess somewhere around $1,000, because that's how much ETH is actually staked on the network. So like you have an incredible amount of supply staked, an incredible amount of people validating this network. It's secure as it's ever been. That being said, I'm just not bullish ETH here, just from a technical perspective. I mean, this looks like it's gonna head back down. That being said, I'm still bullish the ETH BTC pair, meaning I think that ETH, you know, although it heads back down, it still outperforms Bitcoin in the sense that, you know, today it's flat while Bitcoin's down almost 1%. But one thing I did want to point out while I have my screen up is if you look closely, there are a lot of assets that are testing the lows right now. This is one that we published a trade insight on, Uniswap, and this is basically how I'm playing it. You know, $5, highly critical level. We're human beings. We like to put emphasis on psychological and round numbers, but also look at this kind of contraction. If I were to throw the Bollinger Bands on there, you'd see that Bollinger Band, we're seeing less and less volatility. This 20-period smooth moving average is coming down. I think once we get below this $5 level, once we get beyond these wicks, we really start to see some negative price action in things like Uni. But one thing I'd like to point out is look at something like a chart like
hold on, before you dig into that, one thing to
Yeah.
mention on the Uniswap chart is I believe today or yesterday, a DAO vote to allow fee sharing for Uniswap holders was denied. So that could potentially be, you know, that would have probably been a bullish catalyst. If so, probably not too much of a bearish catalyst immediately, considering it's business as usual. Nothing changed, obviously. But
Right.
I would imagine community sentiment is going to continue to decrease with the hope of fee sharing gone. So it's something to consider there, just in terms of fundamentals related to Uniswap.
Yeah. Thank you for mentioning that. That is an important point. And, you know, and that's also like, I like Uniswap. I use it often. I think it's a fantastic DEX. That being said, is the token worth $5? I don't think so. I think it's worth, you know, about 380. That's where my target is. That's where I plan to exit this. And there's a lot of other assets that are looking kind of similar, but like look at AVAX, where it's right at this like breakdown level where essentially there's really like, I mean, this level is so critical for AVAX in so many ways. Like we've essentially come to a level now where, you know, there was a lot of volume distributed here. This was acting as resistance. We got rejected, came all the way back down. This was the breakout level, right? We broke above that level, went up, came back down, tested as support. Some buyers stepped in, some vultures stepped in and made some nice trades here. This was right when Bitcoin was around 16.5K. And then of course it shot up to $21, now is back down. But note how today it's up 1%, where Uniswap is essentially flat. It's up 0.15%. I think a better example would be Comp, which is down 0.36%. And the lines on my chart show you how I think this kind of plays out. But what I take away from that is that there are more shorts in AVAX currently, and it's also reflected in the funding rate as well, than there are in things like Uniswap or Comp. So I don't want to be shorting something that's crowded, because then the squeezes are potentially more violent, and that makes me more susceptible to getting squeezed out of my position. So I'm looking for assets that are flying under the radar, that are relatively flat today. And I think Uniswap is a great example of that. And, if it breaks down below this level, I really do think that we don't see much support until about, $4 or 375, right around this level. So this is a short trade that I like, despite the fact that I fundamentally like the DEX. But the DEX, again, it's like what I said about the economy and the market. They're two separate things. The DEX and the token are two different things. Just because the DEX is great doesn't mean that the token has to have value. Like, the token needs to have a place in that ecosystem, or else it's essentially just kind of useless and just purely speculative. And right now, for the most part, that's kind of what Uniswap is. It's purely a speculative asset that people speculate on based on the use of the exchange. So that's kind of the trade that I know Bob wanted, one that was up and one that was down. But to be honest with you, Bob, I don't really think that there's too many high confidence interval plays to the upside right now in the space, at least from my perspective. Maybe CJ and Nick have a couple of diamonds in the rough, but for me, I think there's clear opportunity to downside. These assets are bleeding out slowly, and I'm happy to let them bleed and, just take that short position. So that's where I'm at. Again,
Yeah,
sorry, Bob.
No worries. No, in terms of Uniswap, I think if they would have instituted some sort of fee share or dividend structure, obviously the token is automatically a security at that point, which I would imagine is probably why A16Z and Uniswap founders were probably very much against it. But with that type of, benefit in terms of holding the token, it probably is a $10 token or $15 token.
Absolutely.
So it's definitely, big defeat for those bullish on Uniswap, at least in the near term. So something to consider there. Well, Bob, I got a few things for you, and maybe CJ does as well. I just wanted to clean it up with the ETH BTC chart, just because if you are bullish, and many people always ask this, if you're bullish, the ETH BTC chart, how do you trade it? You long ETH, you short Bitcoin with equal size, and obviously you will lose some on Bitcoin, but the idea is you would gain more on Ethereum, and that would basically, then you'd capture the ETH BTC gains. And if you're short ETH BTC, then you'd short Ethereum and you'd long Bitcoin. And obviously, the same goes if you win that trade in terms of losing some on Bitcoin and making more on the ETH side of things. So that's just how you would approach that type of trade. If you're like, well, why show me the chart but not show me how to trade it? So that's what you would do. But be very careful, because this is more of an intelligent type of trade, and it can be a little bit confusing if you're used to just being long or short one singular asset. So Bob's question, for those who are not, or maybe just joined us or not checking the chat, but he asked us, quote unquote, what is your favorite long crypto equity and short crypto equity? So when I hear crypto equity, I think of yeah. So, I mean, he could have mentioned, it could have meant token, because I know some people will call them, different. They will give it different nomenclature based on where they're from. But I'm thinking, coin or Riot or Mara is kind of like automatic crypto equities. So one thing I wanted to bring up, so we'll bring up coin, which is up 5%, had quite the volatile charts. It's still stuck underneath this, 1 day estimated trend moving average. So I think, if we get up here, then it'll probably give you a decent short if you see similar price action to what we saw both times, or each time it's gotten near that price level. So I wouldn't short it immediately, but I would look out for that short. Remember, Coinbase, although trying to expand internationally, that could be a benefit. But they also are a US-based company dealing with, Gary Gensler trying to ram down nonsensical things down their throats. So I would say the picture for coin is not as rosy, especially if crypto assets are not on, in a bull market. So probably a decent short here. Again, wouldn't enter now, would look for similar price action at the 1 hour estimated 200 moving average that has given good short opportunities in the past. Another one that I wanted to bring up, and I think I have to type it in, I don't have it saved, is Riot. we've seen Bitcoin mining stats, increase in terms of the fees that miners are collecting related to how clogged the network has been. So if the network stays clogged, miners will make more money. That's just how things work. So this actually looks relatively bullish to me. I wouldn't say it's the most bullish chart in the world, but if we're talking about support and resistance, it was rejected at this level once, had a, consolidated very nicely and is now moving back up. So wouldn't long it yet, but if you can actually close above this, $13, $14 level, then I would say you're probably going to start playing back in this range, which would mean that you could start to target maybe, if you're depending on how overzealous you are, up to the 20s. So those are two trades I would look for from crypto equities on the long and short side. And of course, coin, pay attention to whatever news they have in terms of international business expansion. I wouldn't say it's going to be the biggest boost because look at global volumes, but certainly could be looked at kindly by investors. Then obviously pay attention to U.S. regulatory system and centralized exchange volume as a whole. That data is pretty public, so you can see the trajectory of where coin may head in terms of the money they make from volume. And then obviously Riot, keep track of the miner fees. If they stay high and don't drop too much, then Riot would likely probably be a good play, into the next quarter. So those are two on my mind. But Monty, CJ, before we go ahead and wrap things up, are there any crypto equities that are on your top of your mind?
Yeah,
just the
go ahead,
majors like just Coin, Riot, and Mara. I think they all look really bullish, despite the fact Bitcoin's not really been doing anything. But like, just glancing through them very briefly, they look a lot more desirable. Like Coin looks actually like it is almost bottomed. And I do think I think if you think about Coinbase, like this is probably one of the most successful things that they will have done in quite a while, being their launch of international perpetual futures. Like that's actually a thing that people will use, not their overhyped NFT marketplace. So I'm not ready to give up on Coin.
That was
it's not something that I'm just. Yeah, it was also kind of, they were saying things like it was going to bring in more volume and more revenue than their trading service, which I mean it never even came close, which is unfortunate. But I do like this stock. It's not something that I'm just going to hold through the entire bear market, but it does look like it could break out a little bit here. Not going to trade it personally, but, decent inverse head and shoulders, I'd say.
I mean, I will tell you what, if we get another crypto bull market, you close above that, I mean, that's a little too left curve, but, maybe over the next several years.
You can't use the product of Coinbase and be like, this is what Coin's going to do. Like this is an altcoin that happens to be listed on the NASDAQ and that institutional Americans buy when they want exposure to crypto. That's the point of it. I think it would be a bit reductionist or just have kind of a lack of nuance to kind of just take Coinbase, the product, for what it is. I mean, think about NVIDIA. Like it's just chips, right? It's not data, it's not storage, but it doesn't matter to the market. It's just going to do what it's going to do.
And to that point, CJ, that's one reason why I think you could plausibly make an argument for the miners outperforming is, think about, okay, so Mara and Riot collectively have about 13% of Bitcoin's total hash power. Think about how many NVIDIA, GTX 4080s that would take. That's like literally millions of them. So to see NVIDIA's stock price going up, and then you have two of the largest there's probably nobody that has more processing power in terms of graphics processing than Riot and Mara. And that sets them up for a potential pivot into the AI space as well. So I think that's an interesting concept, is like they have the hash power, right? They have what everyone's wanting. Everyone's buying up Nvidia in the hopes that, you know, GPUs are going to be the cornerstone. They're going to be the gold pan of the gold rush of AI. But I think Riot and Mara are, I think the reason why we're seeing them up, you know, over 5% today is because, you know, they're benefiting from that AI narrative as well, because they have so much processing power that if, you know, going back to that discussion we had earlier, you know, if there is a future wave of AI innovation, I can't imagine, you know, the two largest, the two companies with the most amount of processing power in the world not being involved in that revolution. So it gets you exposure to Bitcoin and also kind of AI, and I think that's a unique opportunity we haven't had in quite some time with those stocks.
100% agreed. You know, this AI it's in your best interest, if you have any experience with technology or markets, or, you know, you're even getting started, to start to theorize, you know, based on these trends that myself, Monty, and CJ are talking about, because your guess is just as good as mine right now. But, you know, depending on whose guess is better than the others, you know, I could make more money in 10 years, or you could, you know. So start to, you know, think how Monty is thinking in terms of, okay, how is this going to impact this sector? And then what companies are in this sector, and what companies are best prepared to weather the recessionary storm, plus capitalize on what's coming up. So, I mean, if you start to ask yourself those questions, you should just start to build lists of companies. And then you obviously use your communities and your access and your network and your own knowledge to then, you know, figure out what you want to invest in, or shorts, because we know there will be good opportunities on both ends. So with that being said, that is pretty much the whole show. CJ, you're a little quiet there towards the end. I wanted to give you one chance before we left, if you had any final thoughts or notes about what Monty and I were talking about.
I didn't really think about that in terms of like the graphics cards or processing power in terms of, you know, Riot and Mara. I figured kind of the reason they were going up was just because the West has been so much more bullish than the East lately, at least when it comes to comparing NASDAQ to Hang Seng, and even Kospi and Nikkei. Nikkei's obviously been leading, but yeah, that's an interesting concept. It'll be interesting to see how it unfolds. And, you know, I think you're absolutely right to be looking for those chain reactions, especially during a bull market when people are like, you know, it's the classic, you know, Doge to Sheeb chain reaction. It's like, you know, everybody goes into Solana, then Luna and AVAX, and then the last one to hit is like Near or Phantom. Like it's those rotations and those chain reactions are very important and very opportunistic. So pay attention for them.
100% agreed. And we will continue to break them down every Monday and Thursday on Trading Rebellion, which is, of course, you know, us three, and all of the knowledge and power that we bring to our communities and services. So we will be here next Monday. We're going to go ahead and wrap everything up now. Thank you to everybody in the chat calling out, you know, both encouraging us and providing some opportunities for other discussions. Really appreciate you, Bob, and others. So we will see everybody next Monday. Quickly before we go, gotta do the shameless plugs. Monty, go ahead and tell everybody about Market Rebellion for me, please.
Yeah, so CJ and myself run a service over there. We got a 24/7 chat. We have a charting service, and essentially we publish 2 trade insights a week with entries, exits, and stop losses. They look a lot like what I was talking about with Uni there, where you have an entry, exit, stop loss, and yeah, that's pretty much what we offer, as well as a weekly member webinar and a whole lot more. So come check it out if you want to hang out with us. Just $1 to try it at marketrebellion.com/try crypto.
Thank you very much, Monty. You can join Monty and CJ over there at Market Rebellion. And then if you would like for you know, sentiment market data, as well as a community very complimentary to Market Rebellion, go ahead and try tradethechain.com for a 14-day free trial. Very similar to Market Rebellion, but with a bit more of a sentiment focus instead of options and as well as equities and stuff like that. So we will see everybody next Monday. We appreciate your time and being here, and good luck with your trades over the weekend. We're hoping everybody hits some big and takes a few of the pieces out of our show into your lives and your trading. So see everybody on Monday.